Hey guys, thank you so much for watching this video. Please give us a call if you guys are looking to improve your credit score, lower your car payment, buy a car, trade in a car. If you're looking to purchase your first home, if you're looking to purchase a rental property, we can help you. Give us a call today, 877-205-7771. Talk to you guys soon, and thanks again.
Hello everyone, this is Calvin Russell, CEO and founder of 850 Club Credit Consultation. Hope everyone's doing well today. Sorry I've been out for quite some time. The flu really takes you out for quite some days. Everyone in my house actually had the flu. So with that said, I am back. Let's get the ball rolling. I got a lot of video ideas, and of course a lot of announcements that's going to be coming up. So stay tuned. But today we're going to talk about debt consolidation. Various reasons, obviously. But I had a couple clients ask me a couple good questions about it. And of course, with us wrapping up the holiday season, we are a couple days before Christmas. So hopefully you got all the Christmas shopping out the way. No matter how you paid for, whether it was cash, debit cards, credit cards, whatever the case may be. Let's go ahead and talk about it because some of you all may have accrued some debt, and it may not be that much. It could be a couple hundred, could be a couple thousand. But again, there are some options for you, okay? So for those who don't know, I've done quite a few videos on personal loans and things of that sort. You can go through whoever you want to go through. You can go through the list we always provide. Any soft pull place is always a great option for you. You can go through a credit union, you can go through your bank. So it's really up to you. With that said, you can also expect a lot of different interest rates, right? The reason why interest rates are a little bit higher with personal loans is because there's no collateral. Collateral is kind of like when you get like an auto loan, and interest rates are a little bit lower on a mortgage, obviously, because there's a house, an auto loan, obviously, because there's a car, but when there's nothing to tangibly, put on the books or to come and get or to repossess or to take ownership of if you do not pay, then the interest rate's a little bit higher because they're hoping that you do pay, okay? But the question that I got was, what all should I try to fit in the debt consolidation? Should it just be credit cards? Can it be a personal loan? Can it be an auto loan? And I say try to fit as much as you possibly can as long as the payments make sense. I've seen some of my clients get personal loans high enough to where they can put the auto loan in there as well as, excuse me, sorry, thanks for bearing with me. So the auto loan was in there, the credit cards were in there, and they added up all their monthly payments, and it actually ended up saving them money going with the personal loan, and the interest rate was better than what they were paying on their auto loan as well too. Now, not everyone has an astronomically high auto loan. We talk about auto loan refinancing, where a personal loan may have to come into play if the auto loan doesn't qualify. The car has to qualify, the years, make, model, all that has to qualify. A lot of times those numbers don't work out the way you want them to, and that's where a personal loan will come into play. But if you can squeeze in, if you have a previous personal loan and the interest rate was astronomical with that, there's nothing wrong with that. That would be the same as refinancing a personal loan. If your personal loan had an interest rate of 28%, 25, 20%, now your score is higher, excuse me, and now you now qualify for 12%, 10, 8, whatever. It will only make sense to throw that in there, as well as credit cards and things of that sort. So you always want to try to get as much as you possibly can, assuming that the numbers over the long term works. Some people are interest rate people, where they say, listen, I got to have the best rate. Some people are payment people, where they're like, listen, I just want to get a lower payment. And there's nothing wrong with getting either or. A lot of times people feel bad if they get something with a lower monthly payment. Keep in mind, if you're used to paying $500 a month, and then you're able to consolidate everything and it drops down to $400 a month, you're saving $100 a month. So there's nothing wrong with that. I'd rather the bank ask for less and I decide to pay more than the other way around, whereas the bank is asked for more and I don't have it, So, and that's the difference, is that a lot of people go through different financial times, and your credit can get you out of these situations. Let your credit give you better terms, and a lot of people are starting to do that now. They're looking at all of their terms once they get a higher score. They're either getting authorized user accounts or getting trade line accounts, getting higher scores, then looking back at their credit report and say, okay, what can I turn into a better term for myself? And that's what it's all about. The banks are not going to reach out to you to do this. If you get lucky, sometimes you may get something in the mail where it says, hey, you could do XYZ, or you can do this, or, but a lot of these companies, sometimes the numbers don't work out the way you want them to. You end up wasting a hard pull. So I always tell people to look at, start looking at things once your score gets above 650, 680, 700, 720. That's when you're going to have a lot more options that are out there. So just kind of keep that in mind when doing a consolidation. Try to get everything you possibly can. Now, this is different than a student loan consolidation. We always recommend doing a student loan consolidation if you have more than one student loan, simply because they still report, all of that interest hits, all those multiple interest hits, especially if you're in deferment, that gets added on to your credit report. And because the credit report, they don't care that it's a student loan. They just know that it's a loan, and that the loan is not that the loan is growing and is not decreasing. Okay. Anytime you have a loan that's increasing, that's usually due to a late payment or an interest spike or something like that. And because of that, the score is sometimes affected. So that's when we recommend a student loan consolidation. What we're talking about today is credit card debt consolidation, or just debt consolidation overall. If a bank is willing to give you enough to cover everything, why not do so, especially if the numbers make sense to you. That's all that matters, is they make sense to you. And then some of you guys may not even be in a situation where student loans debt is not that big of a deal when you're talking about doing a debt consolidation. You can always consider doing a balance transfer. Balance transfer is a great tool to transfer all of your debt, your credit card debt over to one particular card, and sometimes you can get a special rate. Obviously, it would be the only reason to do so if you're at a 0% or 0.94, and sometimes they'll give you 10 months, 12 months, 18 months. Some cards even give you 2 years. I think Citibank is very well known for doing that. So, but either way, I hope this video helps us, especially if you're looking to go into debt consolidation for 2019 or 2020. Is that, hey, put as much as you possibly can in there, save as much money as possible. You can always redo terms as your credit score improves. Okay, so with that, of course, you want to like it, and if you like it, you want to share it, and as always, be sure to subscribe, as we got nothing but great content on the way. Thank you all for bearing with me. I know it's been kind of a break with the videos, but don't worry, got plenty more on the way. Thank you all so much, and catch you guys on the next one.